What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over Polygon Matic as it is entering into an absolutely crucial moment, especially for those of you who may have started trades or purchases on it just recently. Now, do understand before we get into today's technical analysis that we have some huge interest rate news and GDP news coming on Wednesday and Thursday, or tomorrow and the next day, the day after tomorrow. And so for that reason, I am expecting a lot of volatility from things that are not technical, right? Those things have nothing to do with the charts. They have nothing to do with the current price indicators. Those are specifically macro environmental based catalysts that I think will create, again, volatility. So don't take the TA to be exactly, the know all be all, because there are things coming that will shake up this market whether we like it or not. But I do think there are important things happening on the charts right now that shouldn't be ignored, and that's what we're going to cover today. So let's jump straight into today's video. Let's not waste any more time at all. Now, in the last video, I told you guys I was expecting the wave 4 to start relatively soon. Now, I told you guys that about 5 days ago when we were sitting well up here, and as we can see, the price has started to pull towards the downside. Now, the reason we made that read was because of, first and foremost, this bearish cross that we saw forming on the daily MACD, as well as this overextension we saw on the daily RSI, and finally on the daily Bollinger Bands, we were overextended into the top side, which is usually a sign that we will start to pull towards that 20-day simple moving average relatively soon. So due to all those reasons, I said, hey, I think wave 3 is getting a bit extended. I think a wave 4 is very likely, back down to these key levels of support, and then possibly using them to then continue back into wave 5, which seems to be exactly what is playing out at this point. Now, going forward, what we need to be paying the most amount of attention to, and what is so important over the next 72 hours, is the support establishment for wave 4. If we fail to establish wave 4 support between 56 and where we are now, 56 cents and 73 cents, I do believe that we will go into a bearish reversal back to the downside that could drag the price as low as even revisiting 35 to 40 cents, which could be losses of over 50% from where we are now. The reason this is going to be so important is first and foremost the daily 20 SMA. As we can see here, this simple moving average has been the key support level that has held us up in this move on wave 3 to the top side. And I do believe that there is a significant chance we can look to hold support on top of this level and continue forward with wave 5. Now, not only is the 20-day SMA going to be important, but we can also see the zone of confluence that is 56 to 67 cents, as we did mention in the last video. What we can see is that as we first wick down here, we established support. We found resistance, resistance, support, resistance, support, resistance, 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 support. We have interacted with this little zone on multiple occasions over the last few months, and it is extremely important to continue flipping this zone of liquidity into a zone of support and using that extreme foundation establishment here to then be able to push up towards what I believe to be $1.40 to $1.50. So overall, if we do lose that 20 SMA, we lose this key zone of liquidity, it is extremely likely that we do start to barrel roll back down towards, my opinion, 40 cents to 35 cents, which again could be losses from where we are right now, sitting quite substantially towards 45 to even 50%. Now, say in a situation in which we do establish the support here, many of you question, well, why do I think $1.40 to $1.50 would be the breakout target, and why is that the level I'm betting on with my long trade here? Well, personally, if we do go out and we just clear off all these charts real quick and we just look at some history, what we're going to do is we're going to draw some support levels and some horizontal lines at these 3 previous support levels. This huge move that we saw from July to the end of the year, around December of last year, we could see that we had a huge wave 5, a 1, 2, 3, 4, 5 wave push to the top side with 3 establishments of support. If we draw horizontal lines at each one of those establishments of support, you will start to notice something similar. With what we are doing right now in this current wave, looky here. We put in wave 1 at that first level of support. We came down for wave 2. We've now put in wave 3 at that second level of support, possibly put in wave 4. I do believe that wave 5 would extend up to this final level of support, sitting right around $1.45 to complete this interaction and finish this retesting of each one of these key support levels, because we clear as day have been revisiting each one of them once we break past the previous one. So overall, I do believe it is extremely important that we find some support very soon for Matic, between 73 cents to 56 cents. And if we do find some support here and start to bounce, bounce, I am expecting the possible move from, say, let's go 67 cents up here to be anywhere between 80 to even up to 110% in gains. I do believe this is very possible, and I believe that with the right, establishment of support, with Bitcoin possibly starting to see its own growth, with some decent if we react well to the news coming on Wednesday and Thursday, it could be the perfect formula for Matic to see that growth. And I am going to be taking on some long trades if we do see this support establishment happen for wave 4. We can even look at something like the weekly MACD to see that we did just get the first bullish cross that we've seen in a very long time, since the beginning of the year when we made this final push to the upside. We look at the weekly RSI and it is now flipping bullish. We can see it bounce off of this 30 level and looking to continue forward as it does re-interact with this trend line relatively soon here. For all of these reasons, I do believe we are in a position to see a wave 5, and a strong wave 5 at that, but it does become extremely important that we look for the support establishment for wave 4. If we lose this level, I don't believe this is wave 4. I think that if we start to see the price doing this and tumbling down past 50 cents or so, I just don't see it being able to recover fast enough to put in something and to continue to abide by the rules of Elliott's wave theory itself. And I simply just don't believe that any loss of this level between 56 and 67 cents would result in some type of massive growth. I think that that would then lead us to go sideways or to see some type of pull to the downside for the next couple months. Okay, so pay very, very close attention to that. It is very important. And also monitor the news over the next 48 hours to see what the interest rate hikes are and how we do get a reaction to the GDP news, which will likely signal that the world, or at least the United States, is in a recession. Now, before we do go ahead and wrap up today's video, I wanted to bring you all our sponsor of the day, which is of course Vires Finance. Now, this is one that I told you all about quite recently, and you actually did ask for more information on them, hence why they are on the channel again. Now, I told you all that, in a time like this where we see Celsius involved and even Voyager and other types of decentralized finance platforms really starting to see a lot of time of struggle, that investing into these passive income projects is extremely risky. But I do believe that the future does hold passive income projects in DeFi, but it does come with the ability to adapt and change your protocol to be able to match the current situations that we are seeing within the cryptosphere. Well, that's something that Vires did, and that was one of the biggest reasons why I wanted to bring them on the channel, is because I thought there was potential there due to the fact that they are making changes and adaptations to make sure they are sustainable through times like these. Well, in that video, I told you all that it was one that I think has potential to see a lot of growth, especially based off how new it is and the fact that they did make the necessary changes to survive that crazy apocalyptic time that we saw just a few months ago. Now, what we talked about in the last video was the ability to make passive income through, of course, lending out different cryptos such as Vires, Waves, USDN, USDT, USDC, etc. on their platform. What I wanted to talk about today was going to be more focused on some of the other options that they have that you can see passive income that actually does make their own platform even more sustainable, starting here with governance. Now, locking Vires governance grants a share of the revenue stream of every market from Waves to USDN, USDT, etc. Gradual unlock occurs with every block and starts immediately after relocking. The average unlock time is 8 months. Distribution is continuous and the revenue is distributed every block or every minute. Now, they give you a little bit of a calculator here of if you lock in 100 Vires, it will turn into a revenue monthly of about $450, and that is going to, of course, change as time does go on and the platform does grow in popularity. Now, they do offer even other options here, and they let you know exactly how this revenue will be distributed to the DAO from Waves to USDN to USDT, and it gives you exactly how much will be distributed per one Vires token that is locked. So you will know yourself, if you lock in, say, 10 to 15 Vires, you can do the calculations to figure out exactly what you should be earning every single month. Now, not only that, though, if we do go out here and we look at the top of the page, it says you can boost Vires rewards by locking liquidity. Now, if we do go out, what it says here is that locking liquidity for a time range will now yield the majority of Vires daily distribution, which is 225 Vires daily, while regular liquidity provision will earn just a fraction of it at 25 Vires daily. Borrowers will not earn Vires, of course. Now, let's talk about why is this needed. It's similar to governance. This is aimed to create predictable withdrawal dynamics for the markets at Vires.finance. If the majority of users lock up their positions, the minority that want to exit the protocol will be able to do so without causing large-scale liquidity exit issues. Now, what's exciting about being able to add governance and locking in liquidity is it creates a much more sustainable platform and protocol, especially during times like we saw a few months ago where everything is just going absolutely insane. It's kind of a way of you making a commitment to say that even if time gets rough, I am willing to lock my tokens in and are able to, of course, make passive income, but to support the platform even in crazy times. And as they do offer more incentives to do so, I think that will help them find sustainability, even if we do revisit times like in May. And I think that is a big reason as to why we are still seeing them here today, even with so many things like Vault and Celsius going through bankruptcy and just absolutely bad times, right? So overall, I just wanted to update you guys on even more things you can be doing over on Vires Finance. Of course, they are the sponsor, one of the sponsors of the channel. They are sponsoring this video. And of course, I do want you guys to do your own research before investing into anything, but I do believe they have potential and I wanted you to check them out. So with that said, that's going to be about it for today's video. Of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.